Hey guys, it's me Peter. If you find this video valuable, please do subscribe to this channel below and also share this video to all of your friends. It means a lot to me. I will start this video by answering the title of this video by Warren Buffett's quote.
If you don't find a way to make money while you sleep, you will work until you die.
Now, why did he say this? Simply because of inflation.
Inflation will reduce your buying power over time. I still remember I used to buy gorengan for 50 cents each and now it costs me $1.
The idea of investing itself is actually already formed by the ancient man during the agricultural revolution. So simply, these hunter-gatherers think, why don't they raise livestock instead of hunting animals down, wasting their energy, wasting their time, when instead they can farm chicken, for instance. So these chickens would lay eggs and basically these chickens will produce another chicken and provide them with more chickens in the future. That principles work the same with money. The idea is, if money can work for you, then you don't have to work for the rest of your life. Developed countries like United States, Singapore, China are all a big fan of investing. Even half of the population in Singapore invest in stocks. Okay, now you got it, why we have to invest. But the question now is where? Personally, the answer for me is easy. The largest marketplace for businesses on earth, the stock market. Unfortunately, there are still a lot of people who are still skeptical and afraid to invest in stocks. Here are some of misconceptions of investing in stocks that I want to address.
It is better to invest in gold, property, or start a business.
I do agree that there are a lot of ways to invest not only in stocks, and I have no problem with that. Gold. Yeah, you can, but depending on how long you own the gold. In the short term, it won't probably beat inflation. Property. Yes, I'm also a big fan of this. But you need a large capital to start with, right? Property isn't cheap. Starting a business. I do agree with starting a business too, but not everyone has the passion or has the capital or even the abilities to start a business. For me, stocks is the most easiest and convenient way to invest your money.
It is very risky and dangerous, very much like gambling.
Now, first of all, there will always be risk in everything. There will always be a gambling. Let's say you are trying to open a restaurant. Of course, there will be risk associated with opening or starting up a restaurant. Like, what if the customer does not like the food? What if the marketing isn't good enough to attract customers? What if the location is not optimal? Well, this risk, we called it calculated risk. Same with investing in stocks. You are actually investing in businesses that are alive. Alive, yes, fully operating. Simply, you analyze the financial reports every year and determine if the intrinsic value is much more valuable than the current price that is being offered in the stock market. So, when calculating these financial reports, you are also calculating the calculated risk. Gambling is when you do not research about stock and you just randomly pick a stock and hope that it will be the next Facebook. Now, this is called gambling. Investing does not work like that. Investing is doing research, doing calculations, and see if these risks are optimal for you and if you should go ahead with investing in the stocks, for instance.
No time to learn.
Now, this is tricky. A lot of people have said this to me, and I just want to encourage you all not to use this as an excuse. If you are watching this and you are still in your 20s, I suggest maybe to spend 1 to 2 hours per week to study and learn more about stocks or investing in general. Why? Because you are still young and you have less responsibilities and more time than maybe you are later on in your 30s when you have a family, you need to care for your kids, you need to care or work for your kids. And the next reason why you should start now is time is investor's best friend.
This graph simply tells you The faster you invest your money, the more money you will gain later on.
You will have no life, and you must sit 24/7 sitting in front of a computer looking at graphs.
This is totally not true if you're a fundamental investor. So there are two types of trading. First is fundamental trading, and second is technical trading. Fundamental looks at the financial report of the company and determine the value of the company and how much it can generate over a certain period of time. Simply to say, if you determine that Apple worth $10 and currently the stock price is trading at $5, you buy it. On the other hand, technical trading is trading based on market psychology. These types of investors are the one that needs to read graphs or trends in charts to build profit. Simply to say, let's say a trader buys Apple stock at $5 and one day there comes a news saying Steve Jobs is back from the dead. Everyone is optimistic and the price rose into $10. And the trader sold at $10, which means he profited from the psychology of the market for $5. He does not care the intrinsic value of Apple, whether Apple makes money or not. Cool, I hope this video can help you more in understanding about investing. Really, investing in stocks are a great way for you to build your wealth. If you do have more questions about investing, feel free to leave a comment and I might answer your question if I am able to, or I could make another continuation video. Alright, that's it from me. I'll see you next time, guys. Bye bye.
Never depend on a single income.
Make investments to create a second source. Warren Buffett.